Hey guys, how's it going? It's Ollie here from CryptoVest.com. It is the 31st of December today, and we're going to be looking at Ethereum trading against the US dollar over one-day candles to end the year. They've finally confirmed the Constantinople hard fork date, and it's for January 16th, so we can expect that in a couple of weeks. And originally this hard fork was scheduled to take place on the 14th of October earlier this year, although there was some consensus issues and the development team weren't prepared and ready to do it at the same time, and so there was some problems and they weren't able to successfully hard fork, and so they postponed it, and so we can expect it now on January 16th. The main Ethereum improvement proposal is the 1234, where they're going to be delaying the difficulty bomb for 12 months, and they're also going to be reducing the ETH block reward from 3 to 2. And other EIPs as well, they've got 145, but more importantly, they've got 1052, which is to optimize like large-scale code executions. They've got Vitalik's proposal of 1014 to facilitate off-chain scaling solutions, and then the 1283, which is the revised gas cost scheme for S-Store opcode. So a few things that are going to be coming out. It's going to be non-compatible with the old chain, so it's going to be a completely new one. It's part of the Metropolis upgrade to try and make a smoother transition from the proof-of-work mechanism that they're currently using to Casper and the proof-of-stake mechanism that they're hoping to move towards sometime next year. So everyone's expecting this to have a huge impact on Ethereum's price. A lot of people have been talking about it taking back its position as second in the CoinMarketCap listing and as the second highest grossing or highest market capital coin ahead of Ripple. But as you can see right now, we had a nice pump. It's now started to correct, and so we actually broke out of this falling wedge shape on the 15th of December. We had this sort of 60% gain somewhere around that line, all the way up to sort of $160, nearly 80% gain. And before we corrected back down again, we had sort of a bit of a heavy correction down to sort of $120. We've now picked back up again, although we'll have a look at it a bit closer over 4-hour candles shortly, but it's struggling to break above $145 right now. It seems that the bears are now taking back control of the asset and pushing it away from the sort of main bull target that seems to be around that sort of $160 to $182 mark. This particular green band here was a sort of key areas of support and resistance going all the way back actually into sort of July and May time of last year, where you can see on a number of occasions these particular levels were both resistance and support for the asset going forward. Obviously we lifted off this area throughout the year, but as we've sort of continued in this sort of strong bear market, we're now starting to retrace back to these levels. And so you can see on the Chaikin money flow indicator over one-day candles, things are generally looking fairly positive since the sort of November when we had that hashing war with Bitcoin Cash. Overall, buying pressure has been slowly increasing towards the zero line. We're now very close to breaking over that line. As you can see as well, we've actually broken over the 50 moving average, which is for the first time since all the way back around that May time bear market we had after hitting that high earlier in the start of May. And since then, we know we've got close to breaking through it. We pipped above it on the 17th of July, and then from there we've just been getting very close to it. As you can see on the sort of early November, we were tracking perfectly against it, but we just couldn't break over that 50 moving average, and we broke bearish, and now we've started to come back towards it and we've finally broken over it. So we'll be looking to keep above that in the short term. If we look at the Ishimoku indicator as well, you can see we're getting close. We're still a little while off. Is this not going to show now? Still a little way off. Yeah, it's going to take a little while to load on here, unfortunately. But it's we're a little way off. There's basically a resisting Kumo cloud that we're now currently approaching, that we haven't quite broken over it. And this is creating problems. It's not going to show, is it? So basically, the resisting Kumo effectively lines up with this green zone here. So ultimately, we want to break through that, break into this green zone, and then obviously breaking through the Ishimoku cloud and closing above it is a very strong reversal trend signal. So, and this will be what a lot of people are looking for before they get behind Ethereum and get very bullish for it. There's all this anticipation of a run-up prior to the hard fork, so we may expect some strong bull runs to sort of materialize as we get closer towards the date. Obviously, people right now will be celebrating New Year's Eve, so we might not see a lot of trading going on. And you can kind of see that, actually, because Bitcoin has been traveling fairly flat for the last couple of days while people continue with the festivities and things like that. So we may see, once we have New Year's Day, pick up, and then after that, we'll hope to see some strong bullish momentum pick up. And there's also a whole host of things coming in Q1. So we've got obviously the launch of the VanEck and NASDAQ 2.0 Bitcoin futures, VanEck and SolidX's Bitcoin ETF has got the final decision from the SEC comes out in February. You've got Fidelity's digital asset trading platform coming out. And obviously the launch of the backed futures platform. So a whole host of things to look forward to that should really hopefully drive some more money back towards the crypto market and help sort of regain a lot of the losses we've been seeing over this year. Looking at over 4-hour candles, we dive in a little bit closer to have a look at what's going on right now. It's actually looking pretty bearish, so we may expect a bit more of a correction before Ethereum continues upwards. So let's get rid of these for a second. We'll see if the Ishimoku will work on this. It's not working. Why is that not working? That's a pain. Well, if you look at the Ishimoku anyway, I've already seen this on another one. We're actually above the supporting Kumo now, and we're tracking along it. There was a brief, during this correction, we had a sort of resisting Kumo appear, but since we've kind of been consolidating around the sort of $137 support, we've actually been able to hold back, and now the supporting Kumo start to lift off again. So for now, we're still holding above the supporting Kumo, and we still have a TK crossover that supports a bullish market right now. However, we're starting to see very, very early signs of a bear market reversal, and you can see that on the MACD indicator, the parabolic SAR, and particularly the Arun indicator as well. So we'll have a look at these three. And so these three work. So you can see we've just got a parabolic SAR indicator dots appearing above the price action. So you can see dots beneath the price action indicate a strong bull market. And then once they start to flip, you can see the price action usually tanks. So what we're expecting now is for the asset to now turn bearish and start to dip. Looking at the Arun indicator, you can see that we've just got well, that's not a very good view. We've just got the start of a crossover between the Arun up and Arun down line, which is a sort of early sign of a bear market reversal. And you can see also on the MACD indicator, the 12 MA has started to dip below the 26 MA, and we've got a first sign of a selling candle on the histogram. So overall, it's looking like we're going to continue down. We could actually overall enter in some sort of, it might not all be bad. I'm thinking it maybe end up in like this ascending triangle, or maybe a pennant here as we're sort of tracking inside here, or just continue correcting down. So we could, we could fall all the way down to something like the $127 mark before continuing on, and this would actually be positive. If we can continue consolidating in some sort of rough pennant shape, then we may have a breakout once we hit consolidation and enter into this sort of bull target above. So it's not all bad for now, but it's definitely looking like we're going to have a small bearish correction before we go on. As we sort of enter, as people take profits at this time of year particularly, they want to go out and enjoy themselves. So, and we just got to be conscious of that. So yeah, so our first target for this will be, once we're there, to break into the $160 mark. And then once we're in here, we'd like to trace through that breakthrough at $182. We'll have the psychological $200 mark to contend with. And then from there, the sort of strongest resistance, the last sort of main resistance we hit before we unraveled throughout the rest of Q4, seems to be this $222 mark. So this would be an area we'd like to see Ethereum break beyond before continuing bullish. So yeah, guys, let me know what you think in the comment section below. Please check out the full TA at cryptovest.com, and yeah, please like and subscribe. Nice one, thank you.